For more on how Bernanke performed and what it means for the Treasury market, we're joined by Ira Jersey. He's the Director of U.S. Rate Strategy at Credit Suisse Securities, which is one of the 20 banks that is a primary Treasury dealer. Also, Jim Reynolds, of course, who stays with us throughout the hour, guest hosting here. Ira, you didn't see a whole lot of reaction yesterday in the Treasuries, in reaction to Bernanke. Was part of that because of what you just said about inflation?
Well, I think part of it is that the Treasury markets rallied so much, and they were expecting him to be dovish. And in his prepared remarks, he was typical Bernanke. He was dovish. He was worried about the output gap. He was worried that the unemployment rate via his comment about resource slack was still reasonably high. So the Treasury market didn't have a lot of reason to react so much. During the press conference, as it went on, you did see some movement in break-evens. This is break-even inflation rate, where it's a difference between the Treasury inflation protected security market and regular everyday nominal Treasuries, and you did see some movement there, which suggested that that shorter-term inflation would be somewhat higher, but longer-term inflation would still remain somewhat subdued.
But that's not any different from what we've heard Bernanke say, though.
Well, it's not much than his recent speak. I think some of the details of what he said about exit strategies and about the fact that he is a stock person as opposed to a flow person was reasonably important. And the way that I view this, and I think the way that a lot of market participants view this, is more like a preseason baseball game. The chairman's a big baseball fan, so I think that's an appropriate analogy. It's like a preseason baseball game where he's just saying, here's the way we look at things today, but preparing for that time when he's going to have to explain exactly what the exit policies are, exactly what the Fed's doing, how are they going to drain the $2 trillion of excess reserves off their books, and this is just a test and a run-up for that. So he's getting used to it. Exactly.
Jim?
Ira, I certainly do agree with your general comments. He said the word inflation enough to make sure that we knew that he was concerned about it. But in his prioritization, he also made it clear that he wasn't concerned about it enough to begin to let rates move up or tighten a bit, that he wanted to maintain the current policy. I also was impressed, and I'd agree with his view, that the priority should be jobs and the domestic economy. And obviously letting the dollar grow based on the domestic economy growth. So I think that the Treasury market was very, very well anticipative of what he was going to say, and he didn't surprise us either way. So
they were confident in it. Jim, does this make your job easier, having a more transparent Fed?
I think in my view, the major news yesterday wasn't much of what he said, because we kind of anticipated it. Maybe the prioritization of it was good to have that clarity. I think the fact that he did it, the first ever press conference for the Fed, I think was major. When you go back and you look at sort of what we thought the Fed was thinking in 05, 06, and 07, as we moved into one of the worst economic calamities in our history, and what the Fed did or didn't do, a press conference like this would have done, I think, wonders for the marketplace and for the governors to actually know what was being said.
I agree with Jim on that point.